Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys, and it's that time of the week again where we cover the top 5 options plays for the upcoming week. Now, keep in mind, guys, that all of these options plays are going to be for selling options, more specifically for selling put options as a part of a larger strategy called the wheel strategy, in which we write puts, and if ever we're assigned the stock, then we write covered calls to then wheel out of the stock. So quick little example, guys, for selling puts, very, very easy strategy, whether you're a beginner, intermediate, or even advanced investor. Selling puts is basically, you can think of it, guys, as such as a buy limit order that pays you. So let's say you want to buy Amazon stock down here at about $180, but you're not quite sure if it's going to get there by Friday. Well, option number one is you can actually put a limit order for 100 shares there, but it just sits there and doesn't really do anything, right? Well, we can replicate buy limit orders by writing puts. So keep in mind, guys, if we want to write, let's say, if you want to take Amazon, let's say we want to buy Amazon at about 180, well, then we just are going to look at the 180 puts and we're going to sell those. So as you can see here, the 180 puts, we get about $82 for writing that contract. And if the stock stays above 180 by Friday, perfect. We just keep all of the $82 in our pocket. If ever it ends below 180, then we still keep the $82. However, we are forced to buy 100 shares of the stock. And then the week after, we're then going to write covered calls against the position here, guys, to get even more premium and eventually get out of the stock and just pretty much collect all of those profits. Very, very, very easy strategy to run. So in today's video, guys, we're going to go over a few of these strategy rules. Not going to spend too much time on those. Thereafter, we're going to take a look at last week's top 5 options plays and see how those went. And then obviously take a look at this week's top 5 options plays. And I do have a few bonus plays for you guys as well. So with all that out of the way, guys, let's get right into today's video. So the expectation, just before going into a little bit of the plays, right? So the expectation this week, guys, we have to be very, very careful because we are in overbought conditions on the SPY and we are on overbought conditions on the QQQ as well. Now, if you haven't watched my most recent videos, guys, you will notice that I had been pointing out now for the last couple of weeks, the market is not very broad. We have just a few names doing most of the work. That's on the 1 day. On the 1 week relative performance last week, you saw it even more. The bottom half of the market not doing anything while big tech was moving up. And on the 1 month relative as well, all the gains are pretty much here in big tech and a few of your consumer defensive names. The rest of the market has been very, very rough, guys. So one of two possible situations this week here, guys, right? Number one is the bulls just continue grinding ever so slightly higher and we get some nice rotation into the bottom half of the market. That has not been happening so far. Option number 2 is our big tech names start rolling over, the rest of the market does not participate, and we get some larger form, potentially daily consolidation, and maybe even some weekly consolidation as well. So in terms of this week, guys, I will be very, very careful with my selection of stocks, and more specifically, my selection of strike prices for these options as well. So this week, we want to be a little bit more conservative. Even though the bulls are in complete, absolute control of SPY and QQQ, we can't get greedy at these levels in terms of knowing that the rotation is not very broad right now, and also knowing that our indexes are in current daily overbought conditions. So this is definitely not the time to be going all in, right? We need to be very careful in the event we have a larger form pullback, which would just be a very healthy pullback for the markets as a whole. So that's how I'm personally going to be playing this week. Now, in terms of the strategy rules here, guys, I don't want to spend too much time on this. If you haven't seen my 30-minute video where I break down the strategy in detail, I'll leave it top right corner of the video right now and also down below in the video description. It's a 30-minute video on the channel that I pretty much go over all the strategy rules in detail and show you guys how I pick my stocks and how I pick my strike prices as well. So just going to go through these very, very briefly, guys. Rule number 1 to be writing puts, we absolutely need to always be writing it on a solid company. Never write puts on a company you do not want to own. It is rule number 1 for a reason, guys. If you get assigned and have to buy shares of a company that you don't have high conviction in, then managing the position is going to be a little bit emotionally cumbersome for a lot of people, especially if it's a stock that you don't truly believe in, right? Now, number 2, we want to be writing puts on stocks that are in monthly uptrends or long-term ranges, exactly like this, because we know in the event that we pull back into a larger support area, guys, our longer term bulls are going to be at our back. So we want to put all the odds in our favor of getting that little bit of a bounce going off of a support level. Now, number 3, very, very important as well, guys. company needs to have no earnings this week. Obviously, you've seen what's happened with a lot of companies over the most recent quarter. Take a look at CRM after their earnings plunging about, 20%. Other companies like Shopify also down about 20%. So you really don't want to get caught, metaphorically speaking, right, with your pants down, playing companies that have earnings. And then unfortunately, it just blows through your level and you're automatically at a 10-15% loss. So all in all, guys, just don't do it. It comes with additional risk for a reason, right? You can make more money, but the extra risk sometimes, well, most of the time is just not worth it. So I really don't recommend anybody play earnings this week. Now, number 4, we want to be writing stocks that are in an area of support or at least a breakout retest. I always bring up this chart. So writing stocks that are at support. So we want to be targeting lower levels of clear, obvious support. This whole lower range on Autodesk is a perfect example of that. Now, moving into the breakout retest trade, you can see we have a big range of consolidation, top end of the range right here. The breakout retest trade is a weekly uptrend breaking out of our range bound position and retesting the top end of the range. This little circle is what's referred to as the breakout retest area and run. This little retest area, usually a very high probability trade. So most of the trades that I do recommend on the channel are going to all be at least support or a breakout retest pattern. Now, these two next points go hand in hand. Number 1, we want to be writing at or lower than the expected move. If you guys don't know what an expected move is on a stock, that's basically Wall Street's probabilities of how much it can go up or down in a given week. So you can see we have Amazon pulled up right here. And if you don't know how to find these expected moves, guys, just go on optionsai.com. They have a free tool that allows you to estimate these criteria. Just put in the ticker and it gives you the expected move all for free, right? So very easy. You can see the expected move for Amazon is about 179.48. So the key is we want to be writing below, at, or lower than the expected move. It just increases our probabilities, guys, of the market bouncing from that zone if ever it goes down into that zone. And we want to couple that with writing on red or flat days, right? So obviously, if you know the expected move on Amazon is down here in the 179.48, the stock's at 183.66, right? So if on Monday or Tuesday we get a down day and Amazon pulls down into 182, 181, well, then it's going to free up this strike, but even lower, 179, 178, 177, 76, etc., right? So that is what we're trying to do. We're trying to really not chase stocks to the upside. We're looking for stocks that start off a week red and lead into an expected move, and then we're going to be writing options below the expected move to really keep all the odds in our favor. Now, rule number 6, pretty much, we're going to be targeting between 0.5% and 1% in weekly premium. What does that mean, guys? That is your return on capital, right? So what we're looking for here in terms of the 0.5% rule, we'll take the Amazon example once again. You can see that if we're looking for the 180 strikes, we're looking to get about 0.5% from those. How do you know it's 0.5%? Very easy. Just divide the amount of premium that you see on the strike. So take your 82 cents, divide it by your strike price, and that's going to give you your percentage. Here you can see it is almost 0.5%, right? So the reason we go for 0.5%, between 0.5% and 1%, guys, is just because in the last 4 or 5 years that I've been trading this strategy, this represents a very decent level. Not only do you get decent return on investment in terms of decent profits, right? But you also have a very small risk of being assigned. When we're targeting 0.5% to 1% in weekly premium, usually you have about an 80 to 90+% win rate percentage, and you also get paid fairly decent for it. That's why we always target the 0.5 to 1%. So if you want a very quick rule of thumb, if you don't want to do the math on each of these, just look for half of the strike price in cent increments. So a mathematical example would be look for half of 180, which is 90 in cent increments, right? So if you do the math right there, right, if we were to get 90 cents there at 180 strike, you can see that is exactly your 0.5%, right? So just a little quick rule for you guys. And then lastly, we want to take profit at 90% of the contract, guys. The beautiful thing about this strategy is that it takes so little time to manage. You open your positions on a Monday or Tuesday morning, and then you just let the time decay do the rest and let your options pretty much expire worthless. However, we want to set a take profit order, guys, in the event that it happens on a Tuesday or Wednesday. Well, at least you're out of the contract with your 90% profit. Now, if ever we get assigned on any positions, guys, we want to write covered calls against the position, right? So let's take example for Amazon. Let's say we got assigned last week on Amazon. Let's just say we got assigned at 182.50, right? Well, then we have shares at 182.50. How do we get out of those shares? Well, we need to be writing covered calls. And as you can see, guys, usually covered calls pay very well. So the rules that we want to follow for covered calls are excessively simple, guys. It's the exact same rules almost for the put wheel. There's only 2 of them. We want to be writing covered calls between 0.5% and 1% in weekly premium, right? So if you come to this table right here, And we see that we can get for 182.50s, we see we can get almost $2.95. So the minimum is 0.5% to 1%. But by all means, guys, if the strike at which you got assigned, the 182s, are paying a lot more than 1%, definitely just go for it, guys. It helps bring down your average cost and just puts more money in your profit. Very, very easy. And then we want to write at the assigned strike or one strike higher. So as I said, guys, if you got assigned at 182.50, usually we want to write the same strike price. The only time that I will write one strike price higher is, let's say I get assigned on a Friday and then the stock on a Monday morning just goes a lot higher, right? Let's say on Friday we end at about 182. And on the Monday morning when the market opens, it opens at 184, 184.50. Well, then we may not want to write the exact strike at which we got assigned. Maybe we want to get a little bit greedy and write one strike higher at the 185s. That is the only time that I'll be writing one strike higher, guys, is when the next week the market really opens on our stock a lot higher. So hopefully those rules help you out. Now let's move into last week's top 5 options plays, shall we? So starting off from last week, guys, we were looking at 2 semiconductor plays. One of them was AMD. We were looking for AMD anywhere below 158, and we did get a very juicy opportunity to be doing that, guys. You can see here on the Monday morning session, we pretty much came down into the 160 level, and we were looking for anything below 157.50. Now, last week, I was able to write the 155s, and I did show that on the channel in the Monday and Tuesday videos. So I was able to write the 155s. A lot of people would have been able to write even the 155s, or maybe even better, looking at the 152.50s, right? So anybody who have written anywhere below here, where we're looking at 155, 152.50, you would have pretty much gathered all of the profit, and it would have been 100% winning positions. So congratulations to everybody who played AMD. Obviously, AMD ending well above the strikes that we were looking for. So very nice trade there. The second trade we were looking for here, guys, was ON Semiconductor. ON Semiconductor, we were looking for it below the level of 69, right? Really in deep into this level of support zone right here, which is, visible more on the monthly, right? Huge level of support starting between $70 and about $60. And depending on the expected move last week, we were looking for about the 69 strike or better, right? Well, unfortunately, guys, you would have had to get really early on Monday morning to actually get the 69s or lower, because after that, guys, the stock pretty much pulled away from us. So I wouldn't say that the trade window was so wide for this one. There was a little bit of an opportunity early on in Monday morning, but thereafter, no more. So if you did miss this one, no problem at all. It just ran away from us. No need to chase the stock here, guys. The idea was good. As you can see here, the market did not close below our $69 level. So anybody who did have the chance to write maybe the 69 puts early on in the Monday session, you would have been rewarded, and probably you would have been out of the trade most likely by the Wednesday session, pretty much 90% worthless on your contract. You would have been able to collect 90% of that contract's value, right? So now the next one we were looking at for last week, guys, was once again Amazon. Amazon's been featured on the channel for a number of weeks running. Why? Because it's always within our crazy range of support right here, about 180 to about 175. Now, last week we were looking for anything pretty much below the 180. So Amazon only does strikes in $2.50 increments, meaning you can see there's 180, but there's no 179, 178, right? It's 180, 177.50, 175. So $2.50 increments. So you'd have had the choice between the 180s and the 177.50s. Well, unfortunately for us, guys, Amazon on the Monday session, same thing as ON Semiconductors, it just pulled away from us, right? I was looking at Amazon, the 180s for the Monday morning. There wasn't that much premium on them, guys. There was only maybe 50, 60 cents, which is not enough. Usually you want to see about 80, 90 cents for a stock price in the 180 range. We really just didn't get that, right? It kind of pulled away from us during the course of the week, pulled back into our, into a decent location here from the Thursday, Friday session, but we really want to be taking these trades on Monday and Tuesday. So unfortunately, no trade opportunity for most people on Amazon this week. The idea was good, except for the week really started and the stock pulled away from us. So that was pretty much everything for Amazon. Now, the next trade we were looking for was Palantir. So Palantir, we also been playing this one for pretty much the past month and a half in the lower range right here, but there was a little bit of an opportunity considering the fact that we were in a daily uptrend looking for the daily higher low for the trend continuation. We were looking for this pullback, maybe to be targeting puts below $22, right? 22, 21.50. Well, unfortunately, guys, I was also looking for this one last week. Even though the Monday session did come down into the high 22s, it really did not last long, right? Take a look here is your Monday session. You can see Monday pretty much at the open, right? It pretty much launched to the upside over and above 23. So you did have a very short period of amount of time close to the open to write the 22s, but anywhere thereafter, guys, the stock was just too high to get any premium on the 22s. So once again, similar to ON Semiconductor and Amazon, the idea was very good, except for the market really just started pulling away from us on the Monday and Tuesday session. Nothing we can do about that, right? All that we can say is the trade idea was good. It just didn't pull back far enough for us to really get an entry in these lower levels. So that's pretty much everything for Palantir. Now, the next stock we were looking at, guys, was Fortinet. Fortinet, one of my favorite cybersecurity plays, just because it's very close to a huge level of support down here. Fortinet, one of the arguably few, very profitable cybersecurity companies. That's why I really like playing it when it comes down to this lower level, because the valuation is quite good at that point. So Fortinet, the one we were looking at here, guys, is we've been playing this one for 2 weeks in a row, and we've been targeting this 58 level of support, which has been support pretty much for about a month in time, right? So we were looking for pretty much 58 and below, and it did give us a trade entry opportunity, not on the Monday session. Once again, Monday session was a little bit tight, right? You can see from the early hours of the open on the Monday session. Let's just go back and find it. So here's your Monday open. Now it did come down into here ever so briefly, which freed up the $58 strike, but then it kind of pulled away from us. The actual entry, which I as well did play in my own account, was on the Tuesday morning. We got a very nice gap down here on the early Tuesday session, right, into Tuesday afternoon. So when I did see the stock down here in the 58 region, I was able to write actually the 57s, which was even one strike below. So we were looking for 58 or better, depending on the size of the move down. So for everybody that was able to capitalize on that, you would have gotten some really good premium at the 58s or the $57 strike. And happy to say that the stock then moved higher throughout the week. So we pretty much collected all of the juicy premium, 100% win on that one as well. So very happy with the way Fortinet played out specifically. And now the last one we're looking for, one of our problem children, is CLH. Now give me a quick second. And let's get into it. So what we were looking for on CLH, guys. So we filmed the video pretty much last weekend, right? And last weekend, we only had this candle here on Friday. And I was saying the expected move for the week was about $68.85. I left the red line there. And then what happened on the Monday, guys? The Monday session ended up with a almost 10% drop. So obviously, guys, when we open a morning, and we're so red like this, right? This is the 9 a.m. candle, and right into pretty much 10 o'clock, right? We were already down 7, 8, 9%, below the expected move, all the way down to about 66. So at that point, guys, as I always say in every single one of my videos, guys, you remember me saying, depending on the size of the drop, when the week opens, we can possibly shop for even lower strike prices. So we were coming into the week, guys, with an expectation of maybe being able to write possibly, as I was saying in last week's video, the 66, 65. But the problem with that is that as of the Monday session, we were already there. So I went even lower, guys. So this is where you have to use a little bit of your logic and your own discretion into taking these trades, right? Look for the 0.5% rule, which is why I always say as low as possible in the strikes while still getting 0.5%. Now let's pull up CLH for this week and I'll give you an example, right? This stock is very volatile. So take a look at CLH, right? CLH, the 0.5% rule is at $55, right? Another 10% down from the current move. So when we were opening, the reason I say that on Tuesday, guys, because Tuesday was such a bad day, or Monday was such a bad day, that I was actually able to get some decent premium on the $60 strike. And I showed it on the channel as well. I was able to get 41 cents, but the $59 strike was still paying about 0.5%. In hindsight, maybe I should have gone for the 59s instead of the 60s, because the 60s, unfortunately, I got assigned by about 4 pennies. It closed below my strike by about 4 pennies. Not a big deal, guys. We're daily oversold. I am expecting a little bit of a bounce here into next week, pretty much, provided that the Monday session opens green for most of the market. And then we may just roll over for a little bit more downside and pull into the $50 range. So for anybody that got a little bit too ambitious on their strike prices after the Monday drop, if you would have written between $65 and $63, you would have gotten assigned. But then again, guys, the stock price was so close to these strikes that for sure, you would have been pretty much over our 1% rule. That is not good. We want to stay very conservative on these plays. Even me staying conservative, I did get assigned. So if ever you did get assigned here, guys, in the lower $60 range, at least Celsius Holdings provides some very juicy covered call opportunities. Take a look at this $60 strike for me. Well, it's paying about $1.80. That is 3% in 1 week. It's very good. If you got assigned a little bit higher, all the way up to 63, you can see you do get some very juicy premium, even though you would have got assigned. So little play for the week might just be waiting for that little early bounce off of daily oversold conditions, 4-hour oversold conditions are crushed as well, and the 1 hour are still oversold too. So eventually we are going to get this bounce here, guys. So use your discretion. If you don't want to stay into this one, I'll give a fair warning. It is pretty much a waterfall drop, pretty much a falling knife at this point. So if you get an early chance to exit the position early on in the week, I will be exiting the position. I may not even use covered calls. If Monday session is very, very green, let's say we open 62, 63, I may just close the position, guys. And the only reason I may close the position is because what I've told you and what's happening in the broader markets, right? We may just get a little bit of a pullback, and I am not going to FAFO, right? I'm not going to F around and find out whether or not that's going to be true or not, because if the markets do fall apart here, guys, there's no reason that CLH cannot come all the way down and retest its larger form support in the lower $50 range, right? So we have to be a little bit careful with this one. I still love the company, but we also have to understand that we may be heading into a little bit of market weakness. Even though the bulls are in full control, guys, we can't get greedy, right? We can't speculate that this will just continue. We have to hope for the best, but expect the worst. So in terms of how I'm tackling this week, I'm expecting the absolute worst. And if the market just grinds higher, it's perfect. So be it, right? But at least I will have prepared for the scenario that's not the expected scenario right now, right? So that's pretty much everything for CLH. Now, let's move into the top 5 options plays of this week, and you'll see that a few are recurring. So we're going to take a look at the first one, which is going to be AMD. AMD, same logic as before here, guys. I am going to start playing the lower $150 to $140 range. I think it's a great area of long-term support. Right? Beautiful monthly support down here. And although the bulls are not doing the best job of upholding this weekly trend change attempt, we do still have a lot of runway, anything above 142.39, looking for that weekly higher low for weekly trend continuation. So AMD, considering overall market conditions this week, right? If ever we have a larger than expected pullback, I'll be looking to be very conservative. The expected move on AMD for the week is 153.63. So we want to be riding lower than that, preferably as close as possible to the $150 mark. So let's take a look at AMD and see if we can get any juicy premium at the expected move or lower. So lower than 153 essentially, right? Now let's take a look at AMD. I don't know why it pulled me up to that screen, but let's just go back to it. Give me a quick second here. So where is AMD on my little list right here? Let's take a look at the options premiums, and I'll move myself over. You can see the 150 strike is not yet paying 0.5%. You can only get it at 152.50. Now 152.50 is below the expected move. However, we need to exercise some discretion on our positions. If ever on Monday morning, the stock has a decent drop, another 2-3% down, bringing us down maybe to the 157, 156, 155, then guys, we want to be going as low as possible while getting 0.5%. Think of the 150 strike. There's nothing below 150 until 145 this week. So I can't really say do the 147.50s, right? So for me, I'm going to be looking between most likely the 150 strike is going to be my preferred strike for the week. And obviously, guys, if AMD opens off with a brutal sell-off, 4 or 5%, taking us down into our expected move in one day, well, you have to exercise some discretion, right? You have to use the logic, and then you will move down to maybe the 145 strike. 145 is a little bit far away, so it'll just be a case in point to see, will they be offering, let's say if we do drop a heavy amount on Monday morning, will they be offering, I don't know why it keeps changing. Will they be offering at least 75 cents for the 145 strike? That is what we're looking for in the event that AMD really drops. If not, if it just has a slow start to the week, then I may be tempted to do the 150-250s or the 150 strike as close as possible to 150, guys. The other semiconductor play is going to be ON Semiconductor. So ON Semiconductor is a little bit of a cheaper entry, right? Only about a $72 stock. And the stock is coming down into some gorgeous areas of support, right? Big monthly price action level right here. And the drawdown, even if we get a signed up here, is not too much in my opinion, maybe only down to about $60, down to this 200 weekly moving average, right? So what are we looking for on ON Semiconductor? Just looking for the weekly higher low for the eventual trend change, right? The bulls are in full control of this chart. Gorgeous support level down here, about a month worth in the making. Our expected move for the week is about 69.27. So let's go have a look. Can we find any premium below $69 for ON Semiconductor, right? Taking a look at your options chain right here, you can see the $69 mark does not yet give half a percent. Actually, it does. My bad, right? So it does give about half a percent. It gives exactly pretty much half a percent, right? Which would be about 35 cents. So the 69 looks good. So the moral of the story here, guys, is look what happens on Monday. If Monday the stocks open relatively flat, then I could be tempted to throw in a 69 short put order. However, if on the Monday session we kind of come lower with the overall markets down maybe into 71 and the $70 handles, maybe it frees up even more strikes to the downside. Maybe the 68s, the 67s. It all depends on the size of the move down. We look at the size of the move down, then we look at the options chain and we choose the lowest possible strike while still respecting our 0.5% move. So hopefully that makes sense on ON Semiconductor. Now moving on to our second stock that we're going to be looking for, and this one is Square. So Square, we've been looking at this one a lot in the past, but it's kind of broken down since then, weekly downtrend, and just looking to really protect these monthly lower levels, right? We're coming into a very big location of monthly support, and that was pretty much started at about 62 all the way down to about 53, right? So I am looking for the bulls to put up a heck of a fight in here, which is why I'm going to continuously play this area on Square right now. So the expected move on Square is going to be about 59.81 to the downside. So let's take a look at the options chain and see, can we find something maybe below the $59 strike for some decent premium? And as you can see right here, guys, 59, we are literally getting pretty much 0.5% at 59. So once again, guys, if the stock opens flat on the Monday session, well, we could potentially be tempted to actually write the $59 puts, right here, because they are giving us our required percentage points, and it is below the expected move of 59.81. Now, one thing as well, guys, if for some much reason Square opens minus 2-3% tomorrow and brings us into the expected move right away, let's say we come down into $60, high 58s, right? Well, then once again, we have to use our, we have to be very mobile and flexible with our strikes, right? Then if it already comes down on Monday into about 59, 58, or let's say 60, 59, 58, then we need to be going even lower in our strikes, guys. Maybe you get the 58s, the 57s, or maybe even the 56s, depending on the size of the move. This is what I need to stress most importantly, right? We have to be dynamic. We have to be fluid with our strikes, depending on the size of the move on the Monday or the Tuesday session. So hopefully that makes sense, guys. I will be looking for Square, as I said, anywhere between $59 and $56 strikes, depending on the size of the move down, while still getting my 0.5% rule for premium. Now, moving on to the next one, guys, we're going to be looking at Fortinet. Fortinet, same thing that I've been saying pretty much for last week. Same analysis, right? Decent little support level right here. But if ever we smash through this level right here, coming in to some larger form support in terms of a lot of monthly price action, guys, down to about $56 to about $52, right? So decent, not too big of a drawdown percentage, in my opinion, to be going for this trade. So that's why I really like it as well. So the expected move for Fortinet this week is about $59.11. So let's go see, can we find something below 59? Preferably the same strikes we wrote last week, guys, 58, 57, right? So let's go look at Fortinet and see if we can see what we can find on those strikes. So let's pull it up right here. Give me a quick second. All right, so Fortinet, guys, we're looking at the 59s and 58s, right? So as you can see, the 59s almost 0.5%, right? 28 cents. What we need to see on the Monday session is if we get a little bit of dip in Fortinet, similar to what we got last Monday and Tuesday, right? Watch for these Monday and Tuesday. If we get a little bit of a dip, bringing us down into the maybe mid $59 handles, that will most likely, guys, free up the 58, maybe even the 57.50s or the $57 strikes. So I will be looking for one of these three strikes for my primary trade on Fortinet. Now, obviously, if we get a scenario like CLH, let's say Fortinet for some which reason drops 4% on the Monday session. It's not known to have very, very volatile days, except for around times of earnings, especially when we're in a position, guys, where we're trying to really bottom out here, right? So, however, if we do get that 3-4% drop and we immediately Monday morning come down into 59, 58, 50, well, then obviously, guys, we have to go lower. We have to then target maybe the 57, 56, or 55 as low as we can go while still getting 0.5%. And the reason you want to go as low as you can possibly go is because this support range is quite wide. So if we can get lower into the support range rather than being up here, that would be a lot better of a bet, right? So that's just a little bit of analysis on Fortinet and what I'm going to be looking for. Now, stock number 4 is going to be Airbnb. So Airbnb is coming into a very gorgeous level, one that I like to play a lot, guys, about 143 down about 131. The problem with Airbnb in the last couple of weeks is since it's been relatively sideways, we haven't really got much premium. This is where this week comes alive, right? If we do get a little bit of a drawdown in SPY and QQQ, I think Airbnb can maybe have a little bit of an outsized move to the downside. That's okay. We're shopping for Airbnb down here in the lower 140 to 130 range. Look, huge monthly support, big monthly resistance, and now should be acting as support. Just looking to set the monthly high or low for that monthly trend change. You have big monthly moving averages down here, all the way to about 140, right? So if ever Airbnb opens relatively negative tomorrow, it may open up some premium for us. The expected move is down here at about 142.38. So let us see if we can find any premium below 142 on Airbnb. And as you can see, guys, Airbnb, still, the premiums are not the best, right? So the expected move is at 142. We would need to see at least 70 cents right here. Unfortunately, we only see it at the 143. That is just not good enough, guys. It's above our expected move. We want to be below. So what we need to see on Airbnb for us to be willing to take this trade is a little bit of a drop off here early on in the week, either Monday or Tuesday. If we can really pull back down here, guys, into maybe the 144, $143 range, that is most likely going to open up some lower strikes, maybe the 141s or the 140s. So I'm going to be looking for one of these strikes depending on the size of the moves down Monday or Tuesday. If we get them, of course, it could just open green, right? But if we do get a little bit of sell-off here on Airbnb down to 144, 143, then I'm going to be looking for one of these three strikes. 141, 140, and 139, the lowest that I can go while still getting decent premium for that contract. And obviously, for some reason, guys, Airbnb has a minus 4 or 5% day and opens, let's say, on the Monday session or on the Tuesday session, down into the 140 already. Well, then you obviously know we have to go even lower, 137, 136 type of thing, right? So that is just what we're going to be looking for on Airbnb, excuse me. Hopefully that was helpful. And the last one, guys, is going to be Amazon. So Amazon, no stranger to anybody who's been watching these top 5 options videos for the last couple of weeks. Still the exact same trade on Amazon. We are targeting the 180 down to about 175 level. Now, obviously, Amazon is not a tremendously volatile stock, so we don't get much premium as we move down the strikes, right? However, the expected move for the week is about 179.48. So let's have a look at Amazon contracts right here and see if we can find anything below 179.48. So as we already knew early on in the video, I told you guys $2.50 strike increments, right? So there is no 179s or 178s. It's either the 180s or the 177.50s. Now, if you're a bit more of an aggressive bull on Amazon, the 180s do appear fine to me, right? Even though we are consolidating all the way up here, it's at over and above our prior all-time high range of resistance. We're over and above that now. So even if the markets do have a little bit more of a heavy consolidation phase, I really don't expect Amazon to get much lower than about the 175 region. That being said, guys, it all depends on the price action of the stock tomorrow, right? As of now, the 180s are offering decent premium, right? Not quite 0.5%, but I wouldn't be opposed to taking 80 cents on this contract for Amazon just because it's not known to move too much. The best case scenario is if ever we open red tomorrow or Tuesday, bringing us down maybe 182, 181, then have a look at these 177.50s. This is my preferred contract for Amazon. I'll be shopping for this one on Monday or Tuesday. If we get a drop, I'll be patient and I'll be waiting for the 177.50. So just keep that in mind. And as I've said, guys, if for whatever reason Amazon has a very, very bad day tomorrow, down 3%, blasts us down already into 180, 179 type of thing, well, then I may be patient and I'll be looking at the 175s, right? So as low as we can possibly get while still getting decent premium. So that's pretty much the top 5 options plays of this week. Hopefully you guys enjoyed that. Now we do have a couple bonus plays for you guys. Not necessarily for immediate trading. Well, they could be free this week, but just to keep an eye on, these are the ones that I'm looking out for. So number 1 is going to be Pepsi. Pepsi's been one that I've been eyeing for a while. 165 down to about 162.50. Extremely solid range range of support. 200 weekly moving average is right there, this green line. You can see how many times we've tagged this in the past 10 years. Not that many, right? Once down here with the interest rate temper tantrum in 2018, once back here in COVID, and then once back here last fall when they officially said that unfortunately their sales are slowing down, and the same thing happened to Coca-Cola. The same thing happened to a lot of people. Consumer discretionary spending as a byproduct of higher than expected inflation for longer, right? So 165, 162.50, juicy location for Pepsi, guys, monthly support. And this is such a solid company, guys. Even though their sales volume is relatively down a little bit, they're pumping up higher and higher EPS every single quarter. Would not be surprised if a bounce is soon going to be underway. Daily oversold conditions. We don't get daily oversold conditions that often on Pepsi. As a matter of fact, the last time was in October of 2023 when the entire market was pulling back severely. But anytime other than that, guys, you can see as soon as we tap daily oversold conditions, we usually get a very nice bounce, right? So that's why I like Pepsi at these levels. Number 2 is going to be OXY. So we know that oil's been pulling back. A lot of oil companies have been pulling back, and I haven't played these for a while, but you might remember if you're a long-term veteran of the channel, guys, I was playing these things a lot early on in the year just because OXY is such a juicy level of support down here at about $56. The only problem, guys, is the stock just doesn't move that much. There's really not much premium on any of these contracts, right? So take a look at OXY on the premium. You really need the stock price to be almost on top of you to get any premium whatsoever. You can see the stock is currently trading right now at $59.84, and the only location you get juicy premium, guys, is about $59. So it's like almost right there, right? So OXY, it's on my watch list. If ever we continue pulling down into here, 57, 56, that is where I want to write options, 57, 56, 55. So just put it on the watch list, put it on the back burner, guys. Definitely one to watch in the next few weeks. Another one's going to be CLH. I didn't give it this week just because it's a little bit too aggressive for most traders, right? But we're going to be looking on the watch here, guys. If we do, for some much reason, continue this very brutal sell-off into the mid 50s over the course of the week, we could maybe even find some premium down here. 50, 49, $48, which is my preferred strikes for CLH, looking very good, guys. I'd be highly surprised if we just do this, right? Most likely, even if we do continue, we are going to get that bounce from this larger area of support. So CLH, it is a little bit of a risky one, which is why I put it in the bonus plays, right? And not the top 5. I usually try and keep the top 5 for the safer ones as possible, just because I really don't want anybody to lose any money, right? But this is maybe one that I will be looking to play again in the lower $50 strike in the event this sell-off just continues. Now, another one we're going to be looking at here, guys, is UPS. UPS is kind of the same thing, guys, as OXY, right? It really, since it doesn't move that much traditionally, it really doesn't offer that much premium unless your strike is literally on top of the share price right now, right? So you can see UPS trading about 135.65. And if we're going for the 0.5% rule, you can see it only really applies at 134. Now, there's nothing wrong with 134 other than the fact that it's just a little bit too close for most people, guys. It's only about 1.35% away. There's not enough cushion, right? What I need to see on UPS is a very brutal day of sell-off like this. Usually when we get a big red day, then it does, with that increased volatility, it does free up a few more strikes to the downside. UPS for now for me is on the back burner because even though we're coming into a lower level of support right here, if we want to be technically correct and technically perfect with our support levels, well, you guys can see the actual larger form support level is more 127 down to about 120. So if ever we continue this monthly fall off down here in the mid 120s, this is where I'm a lot more attracted to be playing this stock as a whole rather than to be playing it right here and then maybe risk another 5-6% drop, right? So I'm keeping this one on the back burner. It looks really good in the event that we pull back in this larger area of support. So that's pretty much everything that I had for you guys in terms of the bonus plays. And another one, guys, we always have to watch out for is Palantir. Palantir's a little bit too high. I like it pretty much below 22. 22 all the way down to about $20 is my preferred range for Palantir. There's really not that much premium at the 22s right now. So I'll be keeping a watch on it this week. If the markets really do have a week of pullback, let's say, well then if Palantir opens red Monday, Tuesday, we come down 22.50 range, that might free up maybe the 22s, maybe the 2150s, depending how volatile the week is, right? So that is where I'll be looking shopping. It's always on my back burner watch list, guys, if we retest these lower levels. So that's pretty much everything for today's video, guys. Hopefully you guys enjoyed it. Hopefully it was educational. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing if you're new here, guys. I would love to have you as part of the channel. We do these videos every Sunday and daily market recaps every Monday through Friday after the close too. So hopefully I will see you back. And lastly, guys, if you have any questions at all on the strategy, a specific play that you're maybe looking at, and you maybe want to see if you're looking at things in the right direction or stuff like that, or even if you're an advanced trader and you want to talk to me about, credit spreads or stuff like that, iron condors, anything you want, guys, leave it down below in the comments, and I'll be very happy to get back to you, usually within the first 24 hours. Take care, guys. I will see you after the close tomorrow for our daily market recap. Have a great rest of your night. Take care and peace.